Hello, everyone. So today I want to show simulation where actually I purchased for my own children. This is a very powerful simulation because it's going to show us, when we start putting a very small amount into cash value life insurance policy premium of around $300 a month. In this case, it's $3,600 a year. So the simulation shows that at age 11, which is year one of the policy, we have contributed $3,600 for the year. That's $300 a month. 12 months, $3,600. And we contribute that amount when they are starting at age 10. We're able to have the minimum death benefit of $145,000 so that this account is able to take advantage of the tax-free growth. So the money that's going to grow in this policy is going to be tax-free according to the IRS. And then, because it's a life insurance, and it's going to allow us to be able to withdraw or take loans against this policy also tax-free when we need to. This is another advantage of index universal life insurance policy. And then, of course, at the end, it blossoms and it transfers to the heirs as needed, the remaining in the policy. So let's have a look at this compounding scenario to see what does it look like for them. So if we start as parents, guardians, start putting $300 a month into this policy, you can see that by the age that they turn 35, they will already have, in this scenario, $493,000, almost $500,000 when they are 45 years old. Okay, so when they are 45 years old, they already have $500,000 cash sitting there for them if they want to use it. And their death benefit, if God forbid something were to happen at that time, the heirs for them will also receive that $1 million, just over $1 million death benefit. So let's take a look at this 500. At this point, let's say after 35 years, I've contributed, let's say I'm 35 years old, I'm 40 years old, I'm 75. At 75, say, okay, here's the keys to my son or to my daughter. And then at that point, they are able to contribute $300 a month for another 20 years. So when they turn 65, this policy is going to have $2.248 million in that account. And this is going to be available to them at that age. So, for example, if they were at the age of 45, if they want to buy a house, let's say, they can use that $500,000 as a down payment if they want to, or if they don't touch this, leave it where it is, and let it grow compound tax-free. Doing the comparison at that age, look at this. They're able to just put $300 for only 20 years when they're 45 years old. Look at this retirement outlook. You're basically giving them an easy, free retirement. They don't have to worry about when they turn 65. They will retire. By doing this for my kids, I'm making sure that they're going to have a comfortable retirement when they turn 65 years old, guaranteed. So from the age 45, all they have to do is to continue putting $300 every month into this account, and this $493,000 is going to be compounded to reach to $2.248 million. That's $2.25 million. I would like to know who today from the CFAs, CPAs, tax advisor, financial advisors, who will be able to give a financial vehicle example that a person at the age of 45 years old, by putting only $300 a month into an account for 20 years, be able to accumulate over $2 million. Zero. There is no vehicle can compare to this. No vehicle will come. It will blow the socks out of any other vehicle. And the most important part of it is that all of this is going to be tax free. Why? Because we followed originally the guideline from the IRS. The limit from a life insurance policy, we contributed within that limit, and that $300 a month or $600 a year perfectly fits in that profile. And then when they turn to 65, they can even start withdrawing over $230,000 every year. And here's another piece. That amount is also tax free because they're taking loans against their own cash value that they have accumulated. So for example, if you see here from 2,009,000, they take 233, it reduces to 1.922 because the amount is still there and it's still compounding. You take a loan, but the original amount is still there, so it still is subject to getting compounded. So for that reason, they're still able to maintain a significant amount of cash value, and they're able to take that all the way until they're 80 years old. They're going to be able to take $233,000. This is what I have set up for them. This is why I think there's nothing else, no piece of real estate, no other financial vehicle that can come close to this option. So I wanted to share this with you. If you are interested, you want to open similar accounts for your kids, for your children, contact me, let me know. And there are different configurations of this we can do. We can do $300, $400, $500 a month, and have different simulations that I can show you, what you can do for the next 20, 30 years, where you hand over the keys to them and they continue to have a tax-free, comfortable, guaranteed retirement. If you like this type of content, please subscribe to the channel. You'll do a huge favor for us. We don't want you to do really anything else. Just, want to educate you and learn, make sure that you understand what type of products are available to you and to your family and for your goals and objectives. Thank you for watching, and see you on the next video.